Hey everyone, welcome back. Today we're breaking down Zillow's newest housing market forecast, their October 2025 report, and what it says about where home prices, sales, and rents are headed next year. Spoiler alert, it's not a crash, but it's not really a boom either. And by the way, much of this will be my own interpretation of this report and my own thoughts as a real estate investor. So I'll add some extra context to this that is not in the report, so just keep that in mind. According to Zillow's latest forecast, U.S. home values are expected to end 2025 down about 0.9%. That's a slight downward revision, but not the dramatic drop that some people were predicting earlier in the year. Zillow says prices are nearly flat compared to last year and should stay under pressure as more inventory hits the market, especially in the West and South. As someone who lives in California, I concur with that sentiment, and I think it'll be that way until rates meaningfully come down. This means we're seeing the national market stabilize, not falling off a cliff, but definitely cooling from the highs of 2021 and 2022. Now, if you've been watching Crash Bro videos, this is a notable difference in sentiment. There are a few Crash Bros that have been predicting another 2008 for many, many years now, so their data models are really working. So back to Zillow. On the sales side, Zillow projects 4.09 million existing home sales in 2025, which is up just 0.6% from 2024. That's basically flat, meaning the market's still sluggish. Just for context, there was about 6 million home sales in 2018 and 2019. They note that higher mortgage rates and weaker consumer finances are keeping many buyers on the sidelines, and even some sellers are hesitating to list. So if you've noticed homes sitting on the market longer in your area, from Zillow's perspective, this is literally why. Personally, as a real estate investor, I completely agree with this. I have seen many people sitting on the sidelines waiting for rates to come down. I've also seen rates come down a little bit and the market start moving in very significant ways. So from my perspective, there's a lot of demand on the sidelines, at least just, my own anecdotal perspective. I've even had friends looking for homes, up to the $2 million price range, sitting on the sidelines waiting for the right time to get in the market once rates come down. Now, for renters, Zillow expects rent growth to hit multi-year lows. My personal take, the keyword here is growth. The Crash Bros are always talking about slowing growth like it's a decline, but it's not. And I want to be very specific about that. It's showing prices appreciating, just less appreciation than the previous year. Single-family rents are forecast to rise only 2.5% in 2025, down from 4.5% last year. Normal for a national average is like 3 to 5% roughly, so 2.5% is a little lower than average. I'm not shocked by this considering the huge growth we saw in the last few years. Multifamily rents, think apartments, are expected to grow just 1% compared to 2.4% in 2024. That would make 2025 the slowest rent growth year since 2018 for single-family homes and since 2020 for multifamily. So after years of steep rent hikes, tenants finally are catching a bit of a break. And by the way, I love stats like this one from Zillow, talking about the slowest rent growth since 2018, when 2018 was a great time to buy real estate in general. So just something to think about. So now let's change gears a little bit. Let's think about what's driving the market. Zillow points to a few big forces shaping the current trends. Those forces are: inventory is slowly rising as more sellers list homes again. Affordability remains tight, keeping demand soft. And consumer confidence has dipped a bit, with the job market showing some cracks. Together, those forces mean the market's likely to stay balanced or slightly in favor of buyers in 2026, especially if mortgage rates edge lower next year. But again, if mortgage rates edge lower, that could be a tailwind for demand as well. So there could be a few more forces in play here. That last part is just my own personal take. That's not in the Zillow report. So what does this all mean for the housing market going forward? Zillow's forecast paints a picture of slow adjustment, but not really a correction. Prices might drift slightly down, rents may flatten, and sales will inch up as affordability improves, but it's a cooling market, not a collapsing one. If you're a buyer, patience could pay off as inventory builds, but personally, if I see a deal that makes sense for me, I'm going to take it. I'm going to go after it. Now, that's not meant to be advice for you specifically. You shouldn't just listen to a single voice on YouTube. You should always do your own research. I don't know your financial situation, but I will be looking at deals where I can take action personally. If you're a seller, realistic pricing is key. Those pandemic-era bidding wars are mostly gone. Personally, I think it's really important to fix up your home and stage it, especially if it's a luxury home. I say that because there's a larger than usual percentage of homes on the market that are new builds. So buyers are much, much more used to seeing model homes, meaning more of your competition as a seller is pristine and staged with perfect paint and perfect flooring and perfect furniture, all, symmetrically arranged in the house they're looking at. So your home may need to look its best to compete for top dollar. And for renters, 2025 might finally bring some stability after years of sticker shock. All right, that's a quick wrap up of Zillow's latest housing market forecast for October, with some of my own perspective kind of sprinkled in. If you found this video helpful, hit the like button, subscribe, and let me know in the comments what you're seeing in your local market. Are prices falling, holding steady, or still climbing? Thanks for tuning in. We'll see you next time.